The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, and timely interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us what the points paid, points received, or APR. They just tell us the actual locked rates across their 42% of all mortgage transactions nationwide. So what happened yesterday? 30-year conforming 7.153 up. 30-year jumbos came down a little bit, 7.444. 30-year FHA up 6.993. 30-year USDAs were down a little bit. That's the rural areas, generally no down payment, 6.902. And the best loan on the market for those that earned it, that would be the 30-year VA loan, 6.839. That was up as well. And if you want to get our early morning commentary, we try and get it out early morning, every day as early as we can possibly get the data. It's all data dependent, just like the Fed would say. rsrmarketminute.com, rsrmarketminute.com. It's an email we send out. It's usually about 2 pages, real easy read because I'm a simple guy. And it just gives you an idea of what we're seeing, what we're thinking for the market on mortgage rates for that day. Speaking of that day, let's take a look. 10-year Treasury up 3 basis points. S&P 500 down 3.39. And we've got the 30-year bond, the mortgage-backed securities, down 23 basis points. Ow! Yeah, that means interest rates are going up again today. So we'll see what happens by the end of the day. That's the way they're looking right now. Why is all this happening? Well, got the Fed speakers are out there. Several Fed members sound like they already are ready for a pause for September, which is not a big surprise. The interest rates are not going to be increased in September from the Federal Reserve. November, they probably will be, but Fed, not in September. Cleveland Fed President Loretta Mester said that inflation is still too high, but said that she will not wait for inflation to reach 2% to stop hiking rates, as if she has the exclusive vote. Nor will we wait for inflation to reach 2% to cut rates. First sign that she's starting to look into the future. Isn't that about time? Philly Fed President Patrick Harker said that the Fed may be at a point to hold rates steady. Boston Fed President Collins hold restrictive but near peak, not indicating any cut, but wasn't suggesting we need to hike now. Still waiting to hear from Williams, Bostic, Bowman, and Michael Barr. Black Knight Price Index. This is another one. We've got to really be careful of this because you get idiots. And it's the only way I can possibly put it.
Such an idiot.
Diana Olick, CNBC, 10 years now. She's been wrong. Now, how do you keep somebody for 10 years being wrong, exclusively wrong? She's been talking about real estate, and, I'm still waiting. I'm hoping that eventually we can say that she got something right. But we're waiting 10 years now, and she hasn't got it right yet. So what is she misleading people about today? Well, whenever we're giving out or sharing information on home prices, we always look at seasonally adjusted numbers, unless it suits your narrative that you don't want seasonally adjusted numbers, right, Diana Olick? Well, Black Knight reported that home prices rose 1.5% in July, the biggest acceleration from the 0.7% rise in June. Home prices are up 2.3% year over year and continue to set new all-time highs for the third month in a row. From the beginning of the year, home prices are up 4.4%, which would equate to 7.5% annualized pace gains if it continued at this pace. 99 out of 100 cities showed gains. But Diana Olick, what does she do? Because she wants to give negative information. She points out that this non-seasonally adjusted figure was just 0.2%. which is starting to show signs of slowing, according to Miss Olick. According to anybody with half a brain, it's not, but Miss Olick does say that. Every month, Ann Olick has been talking about the seasonally adjusted figure, but now, to fit her narrative, she points it to the lower NSA figure, which is still showing price gains. Now, remember, we've talked about this recently. I don't have the exact date that we did the radio segment on it, but I think we sent it over to our friends over at Chapman University because even they are giving incomplete data. They show that real estate values are going to drop 11%. Not true. The median home price is dropping 11% because that's the mix of properties being sold. Your house probably not dropping 11% anytime soon. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call. 800-306-1990, 800-306-1990.